Hi everyone, welcome back to PGInvIT. It's me, Vinod, with another one. Today was day 30. I hope you managed to get some tiffin coffee in. I was looking at gold, I was looking at Dr. Reddy, I was looking at Natco, and I hoped you looked at something or another. Remember, consistency is the key to success here. It is not the amount of money which you put in the market, it's how consistently you keep putting little money in the market. So it's not the volume, it is being more consistent. It's true in any kind of endurance sport you see. If you want to achieve success in endurance, it's about knocking up small notches and small victories and not looking for those big wins. We're not trying to sprint to the finish here. So keep that in mind. Because a lot of you keep asking me how much to do, what to do. Those are all completely up to you. Since you've been with me for some time, you should know this by now. I do not tell you what to do. I want you to decide what to do. It is not my job to tell you what to do. My job here is to tell you how it works, how I do it, and from there, you have to decide how you want to go about doing it. So stop asking me repeatedly if I should do this or if I should do that. I would be more keen on hearing things like I'm doing this and I'm doing that, and then what do you think about this? Is this correct? I mean, not even correct would be the right way to use, because then you'll be saying, I am doing this is correct. So I'm probably misleading you there. I want to help you improve your form, but what you decide to do has to be your choice, right? How to analyze something or how to understand a certain piece of news, that I'm willing to have a conversation on. But to tell you outright, do this, do that, I'm not going to do it. So don't keep asking me this. The reason why I'm saying this in such great length, taking so many minutes to talk about it, is in the Jyoti Labs video, I had laid out what the company does, where they are, and where the opportunities are. After that, it's up to you. And I get it. You want me to tell you outright, should you consider or not consider? I'm not going to. We have reached a point in proficiency in our group that you can take a call on this if you should be. Looking at the historical averages, where it is, what the company is, the brands they have, you should be willing to dip your beak in it or not, based on what you think is right for you. The reason why I say dip your beak is our investments are very small and we're taking baby steps so you can gain the confidence. I'm never going to encourage you to take a huge, bite or a chunk into any company. I don't do it myself. So keep that in mind. Now, I was happy to read. Some of you felt Jyoti Labs wasn't on your menu. I'm glad to hear that. Some of you felt Jyoti Labs is on your menu. I'm glad to hear that. I personally have put Jyoti Labs on my menu at a certain price point. It makes sense to me. I can afford it on my menu, right? When that price point, if the Mr. Market decides this item on your menu, I'm going to make it very expensive, then I'll walk away from it. And that's the way you should look at it. All companies, when it's a good company, let's take any Tata company, for example, Trent is very expensive. I can't afford to eat meals that expensive, right? So I walk away from it. When Mr. Market decides to discount Trent for me, then maybe I look at it. That's the way I feel about Jyoti Labs. And I'm very happy some of you are strongly forming opinions saying, no, Vinod, you're wrong. This may be, they're asking too much money for this item on the menu. Some of you may be like, no, maybe the amount of money they're asking is valid. That is up to you to decide, right? I've told you where I stand. Have it on my menu, and I'll probably keep it on my menu till I see otherwise. When I see otherwise, I'll tell you, definitely I'll share with you and say, I see it otherwise now. So I want to be as transparent as possible, because this is how your list changes and morphs and grows through the year, through time. We have, the way we do portfolio management is the unequal method, where we look for opportunities. When we find opportunities, we try and capitalize on it, instead of taking the equal approach, where you have a list of companies and you repeatedly do it over and over again and same one. So the reason why our list keeps morphing and changing a little bit now and then over time is also as we grow in confidence to see and explore. So keep that in mind. So I'm happy, like I said. Some of you feel it's not right time. Some of you feel it's the right time. Those of you who keep asking me, should I do it, should I do it? Then take time and consider all the facts and make up your mind. Please make up your own mind. Do not go rely on someone else's opinion to tell you what to do. If you do not know what to do and you're feeling very confused, rewind the clock, take time, see some of the older videos, see some of the Anand's books, read it, try to understand it, gain some confidence, understand, go read about Jyoti Labs. Then maybe once you're feeling sure about yourself, then make up your own mind. But for heaven's sake, do that. Do not rely on some video or some Instagram post or anything else and decide on that. Talking about that, I wanted to hit about power grids today. Power Grid, or it's known as Power Grid Infrastructure Investment Trust. I've done a video on this already, PGInvIT, right? It's an investment trust. And this is a very specific investment trust, which a lot of us were considering it at a certain price point because it was like owning an FD. The returns was as good as an FD because the dividends were so good. The percentage of capital you're putting in to the dividends you were getting was coming out better than an FD at certain price points. So at that time when we were considering it, then the price went up. This is talking about a year ago or more ago. Then didn't have that arbitrage of the FD arbitrage, and then we dropped it. Some of you considered it at that point in time, and you're looking at it and you're wondering why is the price going up and down. So I thought I'll just quickly walk through what PGInvIT is, then what has recently happened in terms of RBI interest rate, and why it is where it is today. After that, at the end of the video, I lay out what my opinions are, and then, like I said in Jyoti Labs, you have to make up your own mind. So if you should consider, not consider, should you sell, hold, should be purely your decision based on the facts of the matter. So what is PGInvIT? Power Grid Infrastructure Investment Trust, right? Was started, it was an irrevocable trust created. Irrevocable means you can't cancel the trust. It was created in 14th September 2020. It was created and sponsored by Power Grid Corporation India Limited, PGCIL. Who owns PGCIL? It is a wholly owned unit of the Ministry of Power. Ministry of Power is the Government of India. So the Government of India, in the Ministry of Power, in a unit called Power Grid Corporation India Limited, set up this investment trust. Why did they do this? Well, this investment trust was set up primarily to invest in and operate power transmission assets. Power transmission assets are the power pillars you see all over the country, and you see these huge, thick transmission lines hanging on them, and those huge substations where the power goes from, maybe hydroelectric, maybe a coal power plant generating the power, transmitting. So the transmission of the power from one place to another to the consumer from the production, that intermediary process is called transmission. So how does PGInvIT do this transmission? Well, this transmission PGInvIT handles by its own units, subsidiaries called SPVs. SPVs are special purpose vehicles. Okay, they are completely owned by PGInvIT, and PGInvIT owns these subsidiaries which operates these transmission lines, and they maintain these transmission lines and they manage these networks, right? So they invest money and they create a special purpose vehicle, and this special purpose vehicle owns these transmission lines and they maintain the transmission lines for the electricity department, for the power Ministry of Power. So how do they earn money from this? Well, these special purpose vehicles, they get into a long-term agreement with the Government of India. It is known as regulated revenue through long-term transmission services agreements, so known as TSAs. So the Government of India or the state government will get into an agreement with the SPVs. So these SPVs and the government to get into an agreement for revenue to be paid to them for transmitting the power and managing and maintaining this, and that is called a TSA. I'm getting very technical here because I want to get this out and done once and for all. So anyone who has doubts about PGInvIT can see this video and understand the nitty-gritties of it. So these are owned by PGInvIT, these SPVs. Some of the famous ones which you should know about is the Vizag Transmission Limited, VTL, Power Grid Kala Amba Transmission Limited, PKATL, Power Grid Parli Transmission Limited, right, which is PPTL, then Power Grid Waroa Transmission Limited, PWTL, Power Grid Jalbur Transmission Limited, which is PJTL. These are all fully owned in December 2024, recent ones. So these are the ones which are recently created and they own 100% stake in all this, PGInvIT. So like I said, Power Grid created PGInvIT. PGInvIT in turn creates the special purpose vehicles. Special purpose vehicles own and operate the transmission lines, right? And they get paid by the government through TSAs, which are the transmission service agreements, long-term revenue, so these are guaranteed revenues to be paid to the special purpose vehicles. Now the question lies, how does the special purpose vehicle get money to set up and operate these transmission lines? This is where PGInvIT steps in. As they're setting up the special purpose vehicles, PGInvIT infuses the cash. Where does PGInvIT get the cash from? They get it in two ways. One is they sell shares, which is people like us, we buy these shares. The other is they take loans. They take long-term loans from banks and they take that money and they put it into this. So how does this PGInvIT get money? PGInvIT gets money because the special purpose vehicles, from the revenue they're getting, they pay the loans which they've taken from PGInvIT through interest payments. Then the profit the special purpose vehicle makes is paid back to PGInvIT as dividends. So these multiple special purpose vehicles, SPVs, which I told you about, 5 of them which I named just now, they pay interest to PGInvIT, they pay dividends to PGInvIT from the revenue, and that is collected by PGInvIT. And what does PGInvIT in turn do with all this money they collect? They pay it back to the shareholders as dividends. It's redistributed back to the shareholders as dividends. After PGInvIT pays its loans and services its debt, whatever profit is left is redistributed back to the shareholders as dividends. And this is where it becomes attractive, because what does it do? Because special purpose vehicles are stable, because they have a TSA and a long-term agreement, the revenue is stable. So this stable cash flow assures stable returns for the investor. Stable dividends and distribution of these funds creates something attractive for an investor. So you invest money, your capital in it, you're assured a stable dividend coming in every year to you. So that's where the surety is. So that's what makes it attractive. This is the same reason why the power grid has set this whole thing up, because majority shareholder in this, they get a steady stream of revenue coming into them from this. And you being a shareholder, you also get to enjoy a portion of this, depending on how many shares you have. So how does this PGInvIT expand and grow? Well, 2 ways. It can borrow more money from banks, or it can come out and sell more units, sell more shares and take more money in. So then that they take that money and they acquire more assets. How do they acquire more assets? They set up more special purpose vehicles everywhere, and that in turn helps them set up more streams of revenue. Now, recently they came into the news. Okay, they've been in the news because you guys have been asking me, we've seen the price fluctuating, should you be considering or not? You should purely consider it based on the dividend payout, the percentage of the dividend across to the amount of money you are being asked to pay for the share. So the share cost and the dividend percentage is what you have to consider. You divide it and then you see, is it the right time to enter it or not, is purely your call, and you should take a call based on that. Now, to sell it, there's not going to be much capital appreciation in a company like this. Why won't there be much capital appreciation, you can ask me? That is because capital appreciation happens when a company's, capital keeps growing. Here, this company, what they do is they distribute it. They give it back to you. That's where you get dividends. So much a dividend is coming to you, and the share price really will not go anywhere too much. It will be yo-yoing and bouncing around in a range. You can see that range in PGInvIT. So you have to decide when to enter, when to exit, purely based on your needs. The main attractive thing is a steady cash flow which keeps coming from them, which is giving you the dividend. That is the selling point of this. Remember this. It is not the share price appreciation here. So why did recently it come into the news? It was because their book value had suddenly taken a turn southwards. It had gone down. So why could it have gone down? I'm not going to get into the numbers. You can Google and read the numbers yourself. I'm here to tell you why it could have gone down. One is larger distribution of dividends. That means the government of India, through Ministry of Power, instructed them to pay more dividends because they needed some cash. That could reduce the earnings. In turn, that could have an impact on book value. 2, the investments in more special purpose vehicles, like I told you, the 4 which I read out, 5 which I read out, which are done in December 2024, that acquiring those costs could have dampened the book value, and debt financing, which was done for that through long-term term loans, could have also reduced the book value. That means increasing the debt without increasing equal amount of revenue immediately will of course reduce the overall book value of the company. So that is another reason. The other is the past assets which were valued in the books last year or the year before suddenly were realized to be overvalued, and that has been adjusted, or the impairment cost has been adjusted. That can also reduce the book value. And the last is, like I said, cash in the company itself is reduced thanks to debt servicing and dividend payout, like what I said before. This could also reduce the book value. So these are the reasons for the change in the book value in PGInvIT. If you do a little bit of Googling, I'm sure you'll find out what the numbers are and what the actual figures are. Now, the other question a lot of you asked me is, RBI recently has reduced the interest rate. Anand has spoken many times that PGInvIT's fortune always lies with the interest rate. If the interest rate goes up, it gets into trouble. When the interest rate comes down, it gets better. Why is that? Because PGInvIT borrows money, right? Like I told you, from banks. Those are floating rates. Floating rate is the repo rate plus the additional add-on which they add. So when the floating rate changes, because the RBI has dropped rate, the floating rate decreases, the interest expense which PGInvIT has to pay also comes down. That means their loans become cheaper for them. If the loans become cheaper, that means they have more cash. If they have more cash, they can give higher dividend payouts. If they can give higher dividend payouts, what will do? There will be a demand for this share. When there's a demand for a certain share or any share, what does it do to the share price? It pushes it up. So this is what the RBI interest rate cycle will do to PGInvIT in a nutshell. I hope you have understood that. Last and least, what is the current financial health of PGInvIT? It is very sound. PGInvIT has a CRISIL rating of AAA, which is a very good rating, which is a very safe rating. Why does it have a safe rating? Because it is a superb company? No, not because of that. It is government owned and government backed. It is owned and operated by the government of India, which is sovereign. So that is the main reason. Its daddy and mummy are very safe. So the child is also very safe. That is the main reason why it has a AAA CRISIL rating. What is the future? Future of this company purely depends on what you think the future of the power sector in India is, what you think the future of interest rate cycle in India is, and what do you think about the cash flow management. Cash flow management, of course, is the government of India. So you know how the government of India operates when they have these companies. Interest rates, it all depends on what happens macroeconomically with US, the Fed, and RBI movements in the Indian rupee and the dollar. So you know that. Power sector demand is purely up to you to speculate. Is India growing? Will India have more power need and power demand will increase in India? If you think so, then PGInvIT has a bright future. If you think the power demand in India has saturated, there will not be any more demand, then the growth will be stagnant. So there it lies. I hope that gave you some insight into PGInvIT and what you should be doing. Am I considering PGInvIT for my daily menu and snacks? No, it's not there on my menu today. Will it be on my menu? Maybe, I don't know. If it does, if it's added on my menu, you'll get to hear about it first from me on Instagram itself or anywhere else where I interact with you one-on-one. I would always be willing to share that information with you as my menu changes. Like how you change your menu and you let me know what you're doing every day. So that I will definitely do. Today, this is where I stand with PGInvIT. In the comments, let me know what you think about PGInvIT. Is it there on your menu? Is it not on your menu? Or is it the first time you heard of PGInvIT and you never knew of this? Such a thing existed. Like, it can happen. This could be the first time you're hearing about it. So put it down in the comments below. I hope that you found this video informative and entertaining as always. And I hope you had a wonderful day and your evening has been very pleasant. Tomorrow is day 31. I'll be back with some other news or another company where we'll talk about this or that and analyze something. But do take tomorrow as an opportunity to do some more tiffin coffee and invest in those ranges. Markets were volatile today. The FIs are very active. Like I've been sharing with you on Instagram, how the rupee is decreasing its value, the dollar is appreciating in value, and how gold is soaring through the roof because of what's happening with the US and China. So keep all that in mind and perspective as you figure things out. We are nowhere near anywhere to break the bank vault and invest everything in the market. We're nowhere there. Please stay safe as far as the stock market is concerned and carry on. Like I say, invest, spend 10-15 minutes investing and then move on with your day. We have a life to live. And Shashwat has been working on a Substack where he's doing stock analysis, especially American stocks. Those of you who are interested in this kind of information or looking for quality information about American companies, please follow the Substack link below. Rupesh has put it there. Click on that and subscribe. And if you are kind enough to pledge and support Shashwat, it'll be of great help to us and the team to offer you better content going forward. Thank you for watching the video.